All right, my favorite time of the week, no pain, no gain. It's our weekly look at these stocks and how well they have done. The panel and I'll go over some of mine first. Fleetmatics Group, FLTX, they've reported recently the stock has done extraordinarily well. It's up 17%. Still in it, considering taking profits, although it might be one of those things 20 years from now we'll say, why the hell did you sell it, right? Next, of course, is Avago, which is the name that Gary talked about, AVGO, from late last summer, up 67%. We're still in it. Everyone jumping on the bandwagon. Love where this is going. Next is Workday. Workday was up $2, and it was down $4. The street beat it up a little bit. They beat on the top and bottom line. I love this company. I love the management. I'm buying this, and I'm holding it. And finally, Splunk gave up a lot of its gains today as well, but I'm still up 48% for you guys on this show since August, and it is a name that you certainly want to stay in. And last but not least, I know it was up 40,000%, but I'm in it anyway, and hopefully you are too. Monster hit a new all-time high. We're up 32% on this show from the last 3 months, so let's stick in there, guys. I think Monster can go to $200. They're all holds or buys as far as I'm concerned. Now let's go to the panel. All right, Matt, now you had a lot of winners here this year. Exact Sciences, though, from November, down a bit. It slipped 10% this week. What happened?
They had earnings come out. They actually beat the estimates, but they lost 38 cents a share. Revenue was up 50%, but revenue only came in at $1.5 million. This is a company that's going after colon cancer. It's the non-invasive test. Colon cancer, second leading killer of all cancers out there. I still believe in it because this is something that it's going to take off. When it does, this will be a big winner.
It's the test you can take at home. Yeah. That's the difference in terms of reimbursements.
Yeah. So does this, then do you ever use a stop on something like this? Is there a number? Like a lot of people at home use a 10% stop loss. With a high beta name, I think, is disastrous. You get stopped out of a stock, and 2 weeks later, you wish you hadn't.
This one, I wouldn't put it in just for the exact reason. And plus, this is a very niche biotech company looking to go after. So I would actually let it ride. I believe in a story long term.
Real quick, before I get you to Hilary, I want to ask you guys about your stop loss techniques. I mean, do you have one, or do you let the fundamentals tell you?
I haven't lost more than 10% in a stock in many years. I just, because I'm very technical based, I have a specific area where I'm buying it, so there's a specific area where I'm selling it, and I can always get back in if it turns back up.
Paul?
I let my winners run and cut my losses quickly.
But how do you do that? It sounds great on paper, but it's not always easy to execute that.
You know,
because sometimes my biggest winners started off down 10%.
Yeah, no, I mean, I let mine run, and I really look at their closeness to the 52-week high.
Okay.
And when they get down 20, 30% from that,
that's
it.
All right, Hilary, let's go to you. One of the audience is going to be surprised that you picked Texas Roadhouse. You talk about it all the time, but it had a great week, and it was up 15% since December. We talk about restaurants doing well, cheap gas prices. Anything else going on there?
Texas Roadhouse keeps expanding. They continue to open up new restaurants, and revenue came in 8% up year over year. EPS was great there, and it's line dancing, and it's great customer service, and that's bringing in people in the right price point.
They should thank her for all the promotions she's been giving them, talking about it every week.
I guess by the name Texas, a lot of restaurants there, oil going down there, not necessarily, maybe counterproductive in that one particular area. You're not worried about that?
I'm not really worried about that. We do always have to worry, of course, commodity prices. You know, I saw the stock of Del Frisco's was down 52-week low today. You know, the
steak is expensive. Beef is expensive.
And so, of course, I do worry there, and Texas Roadhouse has risen quite a bit. You know, I first found Texas Roadhouse for the dividend yield. I was looking for a small cap company that really represented some value and dividend income, and then it turned out there was growth here.
You guys in any restaurant stocks now? You're not in restaurant stocks?
Nope.
I feel like the low-hanging fruit. I've got a couple of them open. Buffalo Wild Wings?
Unfortunately, I don't, and I'm very depressed because I look at them every day, and I cannot believe some of the moves that are going on.
Well, let me give
some of the small cap names.
Let me give you a tip. As soon as Chipotle Mexican Grill raises their price for their steak burritos or whatever the heck that is, buy the stock. Buy the stock. All right, guys. Hey.